Ola Electric listed on the bourses on the 9th of August, and in just 7 sessions, we've seen the stock double in trade today. Now, what works for the company, what doesn't? And does it make sense for you to get into this particular company by investing into it right now? Well, watch the video till the end to know some of these questions and what's next for the company as well going forward. Let's start with the first part, which is what works for the company. Well, the current EV penetration in two-wheelers is at just 5% and is expected to go to 41% by FY28 from a brokerage report of HDFC Securities. Now, Ola currently has roughly 35% market share in the e-two-wheeler segment and is also expecting it to maintain this going forward as well. With the increasing EV penetration, Ola will be one of the key beneficiaries of this trend. The second key thing what works for the company is, of course, its battery venture. Now, the company has invested significant amount in making batteries going forward as well, and currently a EV battery costs roughly 35% of the total vehicle cost. Majority of this 35% is due to these cells. Now, Ola is looking to manufacture those starting from Q1 of FY26 and incorporating them in their EV scooters going forward as well. This will lead to solid cost savings and expecting it to boost margins going forward as well. The other point that we want to highlight is the gross margins for the company in a recently concluded quarter of first of FY25. Now, at 22% gross margins versus 13% year-on-year, this was higher by 870 basis points, and the higher the gross margin, the better for an automaker going forward as well. Automotive segment as well as the EBITDA for it came in at roughly -2%, which was quite strong compared to the last year as well. This is important as high the scale and the benefits that it gets for the company. The auto segment can turn EBITDA positive in its first year as a listed company itself, something that other startups are not able to achieve when you compare it to someone like a Zomato, which took roughly 10 quarters to get EBITDA positive in its main business. Well, what doesn't work for the company is valuation among other key factors. Current valuation at EV to sales of 12 times is very expensive for a company versus the 5 times that it came at during the IPO as well. Now, we are looking at Ola Electric on an EV to sales metric because it's currently a loss making, and other metrics such as price to earnings might not give us the correct picture as well. Since its listing at 5 times EV to sales, the stock has run up by 90% and has made the stock very expensive at 12 times EV to sales valuation, to say the least. Among other key challenges, what might not work for the company is its entry into the EV bike segment. Now, this particular segment and sector is still nascent as well as a very niche market going forward, with only a handful of players selling electric vehicle bikes currently in India. In the whole of last fiscal year of FY24, which is April to March of 2024, there were only roughly 10,000 EV bikes sold, in comparison to roughly 9.5 lakh EV scooters that were sold in the market, out of which 3 lakh was sold by Ola itself. Now, Ola Electric will have to become a category creator for this niche EV segment, especially of the bikes market, and it might need a different strategy to succeed versus what it did in the EV scooter segment. The third key challenge for the company is, of course, that it's loss-making, and brokerages such as HSBC expect it to be loss-making by FY27, which inculcates roughly 8 more quarters of losses for the company on a consolidated basis. Now, even though the revenues are expected to triple from the current levels of roughly around 5,000 odd crores, this will only lead to profitability once a significant volume ramp-up happens, which was not taking into consideration other seasonal factors as well, and that's another key challenge that the company might face going forward as well. Now, the key question that begs here is, what should you do now, and does it make sense to invest in Ola Electric if you missed the bus and didn't apply in the IPO? Now, we spoke on valuation earlier of roughly 12 times its EV to sales. While the auto space has run up, other companies selling EV scooters like Bajaj Auto, which sells the Chetak, trades at just 6 times EV to sales, which is 50% lesser than current valuation of Ola Electric, while other automakers such as TVS Motors trades at just 4 times EV to sales, and Hero MotoCorp, which sells the Vida, trades at roughly 3 times EV to sales, despite being extremely profitable as well. The other key thing that to look at is what people are expecting it to be a Zomato going forward as well. While the company is not strictly comparable, both these new age businesses have what is we look at as the future outlook more than the current numbers as well. While Zomato listed in 2021, it had given a picture of a better future going forward, which led to a strong IPO as well. But what's key to note is that post hitting the 11 times EV to sales valuation metric for Zomato, there was a strong correction, especially when the anchor book opened, and it's the only difference with Ola's automotive measure as well. Now, Ola specifically has reported 2% negative EBITDA margins in this particular quarter of FY25 and is expecting to be EBITDA positive in this venture in just the next couple of quarters versus 10 quarters what Zomato took. But market reaction to this will be key going forward as well. Now, what are the few key things to look out for when we are looking at Ola Electric going forward? Well, the booking numbers for something like an EV bike segment that it has entered will be key to watch out for what's the customer response for some of the bikes that it has launched in the market for as low as 75,000 rupees as well. The other key thing will be the August monthly sales numbers, because we have seen a 50% reduction in EV subsidy scheme by the government under the new EMPS scheme, which replaced the FAME 2 going forward as well. Another key thing will be if FAME 3 is something that to look out for, because the EMPS scheme ends in this particular couple of months only, and another key aspect to continue the EV momentum going forward will be this FAME 3 as well. So what you think of Ola Electric? Let us know in the comments below and follow NDTV Profit for more.